On the weekend, I saw a post that made me feel a bit weird. It was from a venture capital CEO and partner, Simon Dedek. He posted about a blockchain company called Celestia, making a bold claim that it could possibly do a 50 to 100x. And he also kind of implied that you were an idiot if you disagreed, calling those people mid-curvers, like the meme. He then double-backed and posted again. It immediately felt off for me. See, I followed Simon for a while, and I've always seen him as someone pretty credible. I mean, he is the CEO of a venture capital firm, right? And Celestia isn't just some random meme coin, it's a $1 billion piece of blockchain infrastructure. But it has been struggling a lot lately. And it made me question, why would Simon make such a bold claim, and why now? In February, he posted that Moonrock Capital, that firm that he runs, rotated most of their Solana holdings into more Celestia, implying that they already held some before that too. I then thought, well, it's been a few months since then. Is he down from that investment? Yeah, it's down like 40%, 45% from the date he made that post. Suddenly, I started to realize that his recent bullish post might be filled with personal bias. It's not an objective expert's opinion, but someone who is trying to make his investments maybe perform a little bit better. So why is this so dangerous? The doctor's coat effect. Psychologists call this authority bias. I prefer doctor's coat effect because honestly, it just sounds a bit cooler and I like visual stuff. It basically means the tendency to attribute greater accuracy or trustworthiness to the opinions of authority figures, such as doctors, professors, or respected investors, CEOs of venture capital firms, you get the idea. We instinctively trust figures of authority or expertise without critically examining whether there's any truth to what they could say. And here's where it gets even worse. It's not just on a social feed that you need to think about this stuff. I found an article on BitGet, one of the largest crypto exchanges in the world, featuring Simon purely as an expert talking about, you guessed it, Celestia. In this, he said similar stuff, maybe a little bit more seriously than in the social post, but there was zero mention that he was an investor or could have any potential bias. It kind of means that nowhere's safe. To be clear, I'm not here making this video to make Simon out to be some huge villain, but I feel like much more people understand that influencers shill things and then they dump and sell behind your back.
You are one of the most profitable guys in the game, right?
I mean, publicly.
But they don't understand that that also is happening with VCs, venture capital firms, hedge funds, all of these different people. The opinions of these people might not be directly paid for, but they are incentivized. How? Well, it's complicated. Venture capital firms are investment firms that invest in early stage startups. In exchange for this investment, they'll get equity. They make high risk bets, like super high risk. They invest money, they might not see it for a really long time, for a potential 100x upside or more. And it's because they're investing in ideas half the time, things that don't exist yet. There's a lot of things that could go wrong. Not everyone is given access. It's pretty exclusive. Yeah, you've got to often prove that you have something more to offer than just money. Because everyone has money in this world. Can you offer marketing expertise? Do you know someone? Do you know a friend? I guess that's not really an offer of value. But another common way that people have proven value is they've been an influencer or they have a platform. They can promote and talk positively about your project because they've made an investment. The kicker for VCs is that they don't get all the tokens immediately when it goes public. There's something called a vesting schedule or an unlock schedule. They gradually get released over time rather than all at once. And that's so that there isn't an immediate sell-off as soon as it goes public. This vesting schedule could last for years. So these tokens, these companies need consistent buying pressure from retail or other places for a very long period of time so that those investors can recoup and make profit. They need other people to buy the tokens being sold. These vesting schedules and token unlocks are public. How many are released, when, they call them cliffs and other things. And you can find this very easily in places like CoinMarketCap. And they even aggregate all of the stuff together and you can access it and look at it very simply. And while this is all complex enough, it's actually barely scratching the surface. There's a bunch of other stuff and terms that I'm not using like FDV, bullish unlocks versus not bullish unlocks, and probably ones that I've never heard of. Most of what I know is from reading some articles from a guy named Cobie, who's generally considered a good guy in the crypto space. He is one of those early investors, and he got his seat at the table, I'm guessing, from his podcast show called Up Only.
I guess there hasn't been a single day where I didn't think about Bitcoin, so I wish I could go back to 2012 for a day of peace.
That everyone loved because, I don't know, he was just a normal guy, I guess. But he's considered pretty smart, and I would recommend reading this if you are just interested. Cobie cares so much about this stuff, he literally started a company called Echo, which main aim is to give more people access to these early stage investments, not just those, exclusive elite. But not everyone is like Cobie. In fact, most people are probably trying to use this complexity to hide stuff. There was a mechanism buried in the tech of a lot of new projects, Celestia being one of them, that let investors earn returns on their tokens before they unlocked. They were meant to wait to be able to get return. That was part of the deal when they get a much lower price. And that remained true. They couldn't sell their tokens, but they could stake them and earn rewards, which basically means instead of having your tokens over here being unused, you put them over here instead. And when they're over here instead, you get rewards. In Celestia's case, it was a very high percentage, and those rewards, they were sellable immediately. It basically waived the waiting period. It was a bit of a loophole, and it wasn't just Celestia. Waz went on a bit of a mission and uncovered a whole bunch of projects that had this mechanism. Aptos, Starknet, Chainflip, Zeta Chain, Dimension, Sui, Say, Celestia. In Celestia's case, it was one of the most abused, with Polychain Capital dumping approximately $80 million worth of staking rewards on the general public, retail, on whoever bought on regular exchanges. One of them was me, which is why I'm making this video. Fuckers. The kicker, they only invested $20 million at the start, so they'd made a 4x on their investment through this mechanism, and they still owned all of their other tokens, which were also still locked. They couldn't even sell them yet. This really, I'm trying to present facts in a really unemotional way, but this stuff genuinely pisses me off. It's not cool, and it's not transparent enough. It's not just standard venture capital funding things that normal people need to understand if you're going to jump into the shark's tank. You have to really dig deeper. That's why I made myself this little checklist that I use when I think about investing in a new project. How to make VCs not fuck you. I haven't figured out the name for it. Practical tips. It's just some stuff that I do to check myself before I go and put my house deposit on something that's stupid as hell, like Fartcoin.
I'm about to pitch Fartcoin to a real-life hedge fund. Hot air rises.
Always assume there is bias. It doesn't matter who the person is, whether they're an influencer, your friend, someone you look up to. They could be doing it unintentionally. Ask the question, is this person trying to sell you something? Are their motives pure, kind? Do something to help you get something beautiful in your life, save the world. I will say in the finance sector, most of the time it is not that. People want to make money. That's why they're here. Ask yourself, have I earned this recommendation or info? How much effort was required? Higher the effort, the higher the chance it's possibly valuable. Always check for clear public disclosures. Every project normally has documents. It used to be called a white paper, now it's a GitHub or a Gitbook or whatever the terms are. It's like a nice little doc. Sometimes it's much more in depth. They have websites. You can read up about all the details, all the beautiful tech they're building, the innovations, what they're going to do to change the world. But also things like, the staking mechanisms, the way tokenomics work. And yes, nefarious characters could bury bad things amongst heaps of information and paper. Fortunately, AI exists now, and there is a cool function called deep research. You can ask a question about a specific project. It'll go and read all those documents for you, like you can see it doing right here in the case of Celestia for me when I made this video. Recognize that there's other forms of emotional bias that our lovely human brains give to us. For example, social proof. Everyone else in the comments saying, yes, I agree with that, that's a great investment, will incrementally make your brain go, oh yeah, true. If everyone else agrees, then I probably agree too. Another big one is confirmation bias. Your brain will be trying to confirm that you are right, not that you're wrong. You are trying to constantly find information that will confirm your bias. If you're someone that naturally believes in crypto or tech like me, my brain is constantly trying to tell me that every single token is a good investment because, well, yeah, I believe that it can change the world. And yeah, that has burnt me many times. There's a cool new product called Ethos, which is kind of like Google reviews for people in the industry. And yeah, you can see if people think they're a scammer or not just by looking at their profile and reviews. And the last one, always verify with independent sources, multiple. Never rely solely on one expert, no matter how reputable they are. See, one of those people that got wrecked by Celestia and a bunch of other tokens that Waz pointed out in his thread was me. I didn't know any of this stuff. And I'm not ashamed to admit that because this is incredibly complicated. Like, how would I have known any of this stuff? And I've learnt my lesson. And I think when I saw Simon's post, it struck a chord. It made me feel crappy because it wasn't that obvious that he had bias. I only know that because of my past experience. So I hope if you're seeing this and you didn't know about this stuff, you can learn from my mistake.
Considering how different things are now compared to how they were even 6 months ago.
Yeah, so, well, if you have no capital, I mean, you can just start scamming, bro.